Hi business owners, this is your friendly neighborhood financial professional, Great Okonkwo. So today we'll be discussing 12 ways to package a commercial loan. If you are assured that your business or prospect's business appears to be viable, then it is time to begin the underwriting of the loan package. It is critical that a packaging and presentation levels of due diligence and underwriting be as thorough as possible with attention to detail. If properly packaged, it can be quickly presented to commercial lenders. Now, time spent on marginal transactions like poor guarantors, limited time in business, weak financial data, obsolete collateral, etc. is generally time wasted. Now, number one, application. Although most commercial lenders have their own formal loan application that must be completed and returned by the prospect, you must utilize a generic application as you may not immediately know which commercial lender to utilize. For that reason, we at Diamond Ethical can help you with the variety of applications that are acceptable to many lenders. Number two, financial statements. In any commercial lending facility, it is crucial to have information of the historical financial nature as part of the loan package. Most commercial lenders will require at least 3 fiscal years of report and the most interim financial statement as part of the package. As a rule of thumb, you should have a minimum of 4 years of your historical financial information. Most commercial lenders that are considering a term loan may also ask you for 5 or 10 year spread of historical financial information, so don't be surprised. This will show significant financial information for trend purposes. So if the lender is making a 15, 20, 25 year term loan on commercial real estate, this often will be a requirement. You should include the balance sheet, income statement, and any or all notes or attachment that an accountant may include in a prepared statement. That's how critical it is. This may also include a breakdown on cost of goods sold, separate schedules of G&A expenses, cash flow statements, etc. It is always best to get an original bound copy of the physical reports, not a photocopy. No pages of the report should be missing. Number 3, personal financial statements. Now, because most potential companies are closely held, it is almost always a routine to include the personal financial statements, the PFS, of the principals. A principal in most cases is an officer or owner of 20% or more of the common stock of the applicant company. If it is a partnership, proprietorship, or LLC, you must include all of the PFFs for those individuals. Number 4, projected income and balance sheet cash flow statements. Whenever a term loan is being requested or considered, this will always be a requirement. Even when the facility is to be a revolving loan, many commercial lenders will request this, okay? A commercial lender needs to have an estimate or estimates on the positive implications of the new loan and how it may affect the borrowing relationship. If the prospect is projecting a downturn, planned reduction of product line, removal of certain sales, market condition, etc., or an upward trend, increased sales, new project lines, etc., the commercial lender needs to be aware of and plan appropriately of these things. Number 5, accounts receivable aging reports. Considering the liquidity of accounts receivables and the emphasis placed on them from a collateral value, it goes without saying that attention will be placed in this area. Aging reports should come in the following format. Detailed AR report. This lists all open invoices by number, customer, days, outstanding, etc. It should also come in summary AR reports. This simply lists the customer and the open balances. Customers should at least have their software to track the receivables from the date the invoice was generated as opposed to only tracking it after the due date. An aging report should always be within 15 days of its most recent reconciliation. Any specific issues regarding a customer's balance, high concentration, significant amount of the 60 to 90 day columns with written age, disputes, etc. should be highlighted and provided under separate cover. Revolving loans, the lines of credit are based on the overall credit quality of the accounts receivable and exposures of the individual account debtors. So emphasis will be placed on the owners or managers and their ability to exercise proper credit extension and receivable management. The only exception would be the rare cases when the lending facility is solely against fixed asset collateral, such as machinery or commercial real estate. Number 6, accounts payable report. This report payable situation is always of importance to prospective commercial lender. Whether the loan is against revolving or fixed asset collateral, both, the commercial lender must ensure that the prospect is in good standing with their trade creditors. If, for example, payables are seriously delinquent, the commercial lender must address whether or not the proposed credit facility will sufficiently cover the payoff of any such delinquency. If not, the commercial lender may be in danger of jeopardizing its position in the overall lending relationship. Now, contra accounts can also be identified against the agent report through analysis of the accounts payable. A payables report should always be within 15 days of its most recent reconciliation. Number 7, tax return, personal and corporate. All commercial lenders will require a minimum of 3 years of both personal and corporate tax returns for any type of credit facility. There are few exceptions to this rule. All schedules should be attached to this documentation. Number 8, customer, the vendor list. It is highly recommended that a prospect provides a complete customer and vendor list in the event that the commercial lender chooses to perform additional due diligence on the customer or vendor database. They can easily revert to information. Number 9, articles of incorporation. Always obtain a copy of the complete organizational papers. Utilize the following guidelines, like corporations, articles of incorporation, limited liability companies, articles of organization, partnership agreement, trade names. Obtain any doing business as or fictitious name filing. Foreign corporations obtain foreign status certificates from the state in which they have a physical location. For example, a company may be organized in Delaware but operating in Florida. This is therefore a Delaware corporation recognized by the state of Florida as a foreign corporation operating within its borders. All information listed above should be submitted with an amendment or amendments of certificates by officers to reflect the amended structure. Number 10, narrative description of business. You should provide information regarding your business. This may take the place of a business plan, collateral, marketing material, website information, etc. This should be enough information in which you can prepare a general outline of your business or prospect's business. Number 11, the current resumes of principals. All commercial lenders will want to know the experience level and background of any potential borrower, period. For that reason, it is recommended that the principals involved will update their resume to concisely outline the experience and background in thumbnail fashion. Number 12, discretionary items. Whenever a term loan is being contemplated, the commercial lender will always require an appraisal. Thus, if the prospect is requesting such a loan, it would be helpful to enclose any recent appraisal for review by the commercial lender. So appraisals are generally acceptable up to 1 year old and should be rendered in the commercial lender's name. Some commercial lenders will accept a recent MAI appraisal or on real estate or a recent FLV, forced liquidation value appraisal on machinery and equipment. Usually this is based on knowledge and reliance upon the individual's appraisal firm. Other items that may be optional and germane only to term loans, particularly real estate, are color photographs of the real estate and the machinery and outside of the buildings and grounds, and companies and personal tax returns for the last 3 years. Some lenders will also require copies of deeds and notes covering proposed real estate facilities. For businesses that are applying for any form of SBA-backed credit facility, a business plan with projections is generally required. That brings us to the end of the video. You need funding for your business? Apply at www.diamondethcool.com/apply.